Okay, very good morning. It is Friday the 13th of April. Unlucky for some. But let's just have a quick look at the charts this morning. Really quite a few questions obviously throughout this week about Syria. And so what I thought I'd just go straight in and kick off with was that Charlie, Amplifies Charlie's put together quite a nice little brief slide pack of the current situation of what's going on. So let's just kick off with that and then we'll take it from there. So the Middle Eastern crisis, what's going on, who, what, why and how, and just going through of what we're looking at here at the moment. So who's involved? I mean, this is one of the things we were talking about initially a couple of days ago. It's kind of, you know, what relevance does Syria really have, and then why is there, who's on whose team, and trying to make sense then of the narrative that's coming out of the kind of the allied forces, if you like, so the US, Turkey, Saudi Arabia, and we've seen were originally backers of the rebel groups who were the main adversaries of the Syrian government under Assad, and then Assad being aligned with the likes of Vladimir Putin, and also Iran and Hezbollah, as well as local militia, and it's this that's kind of, it was originally here between, you would say, the Syrian government, the rebel groups, and the secondary, which was ISIS or the Islamic State. But what kind of has happened is this has been a proxy kind of war for the US and its allies, backing of the rebel groups, and then of that confrontation with chiefly Russia and Iran. So where did this come about? Well, the West came in as their hatred for Assad and how he has handled the situation, i.e., this is the key one, the use of chemical weapons against the US-backed rebel forces. But obviously, as you would have seen a number of years ago, civilians being caught up in this particular episode. So what's Putin's involvement? Assad uses chemical weapons. Putin has told Assad to back down. America start training rebels officially. Putin sends fighter jets to support Assad to bomb ISIS, but ends up bombing American-backed rebels instead. And so you can see where the kind of first initiation of this particular situation has been ongoing for quite a long period of time, actually. This is just the latest kind of episode, if you like. Putin has been suggested to support Assad is that he has been known to have ambitions to build an oil and gas pipeline. This is what I always find most fascinating about politics, is that you cut through all of the religious issues, the borders of various different arguments about sovereignty, and it all comes down to oil and gas. And it all comes down to money. A bit of a, I know, sad way of looking at things, but you know, why Russian interest? Well, if you want to build an oil and gas pipeline through Syria and into Europe, this is quite key, and hence a lot of interest from the Russians. The American involvement, US involved because of Assad's inhumane actions towards his people. So as you will know, things like the UN, chiefly led by the biggest partner, which is America, even in the current context right now, even though you've had people like Macron, Theresa May, Mohammed bin Salman all talking out, speaking about wanting to potentially take military action or would be okay with that happening, they're all seemingly waiting for the US to take the lead. And that typically is quite a common approach. The kind of the major power certainly is America, and we know this because of the size of their military force, of course, which the US defense budget is the same as the equivalent of the next 7 biggest militaries on the planet. So certainly America has the biggest might. The war in Yemen, this is something else to be aware of, because this is also ongoing at this point in time. And as you can see here from the map, you've got Syria up here at the top, bordering of course here with Iraq, but then further down there's this also within the region, the conflict that's been going on between Saudi Arabia in Iran, through the back door like Syria, it's Yemen. And now Yemen, Iranian-backed Houthi rebels have been showing their capability. They've been firing missiles in all different types of locations into Saudi Arabia. the missiles said to be then supplied supplied by Iran to the Houthi militants via Russia. So you can see where this is all kind of heading to in that respect. The problem here, of course, is that all of these countries are the largest oil producing nations on the planet, and so then consequently any political tensions and unrest in this region has severe consequence for potential production. The major OPEC oil producers, in fact, as you all know, one of probably the most important choke point for the passage of seaborne oil is the Straits of Hormuz. And as you can see here, you've got the 4 biggest OPEC producing nations: Saudi Arabia, Iraq, Iran and Kuwait, and all of this oil out of the Persian Gulf must go out into the Gulf of Oman via the Straits of Hormuz. This then is a particular sweet spot, if you like, that can be targeted often. Historically, this is when the Iranian Revolutionary Guard have been quite active here. There's a high degree of presence of US military personnel in this particular area. So this is something definitely to be mindful of, because this being affected would have an immediate and impactful impact on the price of oil. This is what's been happening though, more recently with Yemen in particular, and I saw this comment in the bank research report from RBC this morning. And what this graphic looks like here, don't be fooled by the colours. So the blue here is not the sea, this is actually Saudi Arabia that they're using. So this is that same graphic, Saudi here, the bigger landmass, with Yemen at the bottom, and you can see Yemen on the very western coastline, or if you like, of the country, bordering on the kind of southwestern tip of Saudi Arabia. That's the area that's under Houthi control and where the missiles are coming from. Now, you probably would have heard during the whole corruption purge and so on that happened in Saudi a few months ago, they also coincided with missile launches from here into Riyadh. You can see that's been a common target on the Saudi capital, but they've also been targeting other more closer locations, of which Saudi Aramco, of course, have lots of different facilities. There is even, in fact, one missile that they fired at Mecca. So, you know, the gravity of the situation. The point being here that actually Houthi attacks on Saudi Arabia, although definitely to be watched because of the connotations this has for the friction with Iran, they are quite common. Actually, much more common than I thought when I've looked at the data. So you can see here, 5 in Q1, 2 Q2 of 2017. So cumulatively, you know, you're talking the best part of 15 missiles fired, and then you've had another 4 already so far this year. So it's not a completely new situation. So maybe that's why when you're hearing of reports of missile attacks on Riyadh, it's not so market sensitive as it maybe once was. I'll send these slides out to you so you can see this, but this is a nice neat timeline going back basically from 2011 all the way up to snaking around to where we are at the moment. As I said, the Syrian situation isn't a new one, it's just this is the latest kind of flashpoint of political tension that we've had. The other areas to be aware of here, of course, is Turkey, because in 2015 Turkey starts bombing Kurdish forces in Iraq, but Turkey doesn't bomb ISIS. And then later in the year, Russia sends military aircraft to help Assad bomb ISIS and ends up hitting those American troops, and then so on and so forth. Things have begun to escalate quite quickly, all the way up to where we were this time a year ago when Trump ordered those Tomahawk missiles to strike an airbase in Syria. The current situation, so where we're at the moment, and this is kind of what's really defined the main, I guess, theme of the week. This was Donald Trump's tweet that he made, of course, you know, get the missiles ready was the kind of mantra. Russia replied, okay America, let's start by you getting rid of your chemical weapons. Only for then, I would say, it has dissipated slightly, and we'll get to that in a second, because Donald Trump has, I would say, took his foot off the gas a little bit on how aggressive he was comparative to about 48 hours ago. The other global powers we just briefly mentioned, Theresa May had her cabinet meeting yesterday. The current situation is here. Essentially, she is willing to back any potential action that may happen from a collective allied force from the West. France's Emmanuel Macron is the same, and I was having quite a conversation with Saif yesterday. Who's Macron being, whining and dining with, having a great old time is Saudi Arabia. Mohammed bin Salman's been in France, doing the kind of rounds for this whole boosting of the vision of 2030 and foreign investment. Also, given the fact of the situation heightening with Iran, when better to start meeting up with your Western kind of allies to get them on side again. The one interesting one here, of course, what's Angela Merkel saying? Merkel, of course, rules out any German participation in Syria. Now, if you remember what happened when you had the annexation of Crimea and eastern Ukraine during 2013-14, this was when Germany were very reticent to get involved. Merkel hardly criticised Russia at all, comparative to people like the UK, Boris Johnson, saying all kinds of manner of sins about Putin and Russia, about how we should be involved and so on and so forth. Now, why does Merkel take such a stance? Well, that's because given the pipeline structures that come out of Russia, even via Ukraine into Germany, Germany is about 40% reliant of all of its gas reserves coming from Russia. And so Germany, in effect, cannot function without a nice, cohesive, smooth, ongoing relationship for the basis of energy, which is absolutely critical to the functioning of their economy, both economically and socially. So, quite interesting how these things do, play out in that respect. Why is it important for oil? Well, this is just a refresher, really. You guys already know this. Of course, the three big names of the OPEC producing nations, Saudi the biggest, producing, let's say, circa 10.4, 10.5 million. Iraq kind of second, around 4.7. Iran tracking around 4. So hopefully that gets you a little bit up to speed with some of the things that certainly we've been looking at. One of the really great things that I liked about Charlie putting together these slides, and I really suggest that you guys do the same, is a question I often get is, there's so much stuff to learn when it comes to global macro. Whereas what I kind of try to do is get people to focus on one specific theme, know it quite well, because that is ultimately what's driving the market here and now. And then over time, you basically accumulate a quite wide range of knowledge across different subjects. Like if I think back to 2010, 2011, all of a sudden I become a Greek political expert. Now, can I tell you everything about Greek Parliament right now? Probably not, but give me 5 minutes and it'll all come flooding back to me, because this was exactly the same intensity we were looking at Greece as what we're looking at Syria at the moment. So rather than try to learn everything, my kind of advice to new traders is definitely just take an isolated event and know it well, because ultimately things like Syria, we were just looking at the timeline. It's been going on for years. It's not going anywhere. It will continue to be happening. The only thing is that the hierarchy of influencing factors on the market will shift. And so, knowing things about Northern Ireland and the Irish border, well, what good is that in today's market? That's yesterday's news. But will that become a big theme come a couple months' time when we have the UK parliamentary hearing on the EU's customs union? For sure, this will be a talking point again, and we'll all become Northern Irish experts again. So this is my kind of advice to how to tackle the infinite universe of information, if you like, to cut through the noise and be able to be a bit more, let's say, in touch with the current intraday sentiment in that respect. All right, just having a quick look at the charts. Looking at the FX markets, the dollar's just softening up a little bit, so both the pairs on the front foot. I can see euro dollar's just broken its Asia range here, got above pivot. Let's have a quick look. I guess if it keeps moving to the upside, maybe kind of looking up to the area of the 124 handles, not too far from where this current price has just hit and bounced so far. And then you've kind of got those lows that we were printing back 2 days ago before the initial break then came in yesterday's session. So maybe up there I'll be looking at if we continue to move higher. Cable though is quite interesting, because cable has broken above that high from yesterday, and if we start looking at this, I had this marked up from previous discussions gone by. And you remember when we had the agreement for the transitional deal got locked in? That was that sweet spot there. You can see this was kind of that ability of the transitional deal initially agreed, then ratified, but you had the wage data improving in the UK, you had the dovish Fed, which weakened the dollar, you had then up to basically the 143 handle, and if you look where we are this morning, we've broken that. Obviously this trade war rhetoric over the past, I'd say 10 days also helped the dollar weakness and consequently helped support that trend as well. So cable though, technically above the 143 handle and above those highs. If we start looking on a slightly longer time frame here, this is a daily chart. We've got, if we start looking at the highs printed back at the beginning of the year, that would be the kind of first port of call, 143.70 for the bigger picture though. Certainly I can't see any reason why we're just not going to continue to edge higher in cable. If you think about the dynamics of the dollar at the moment, whether it's this kind of structural element of a weaker dollar based on the fiscal deterioration, this twin deficits that you hear talked about with America, in combination with this protectionism stance, this is all weaker dollar. And at the moment, I just think with Brexit, the economic data is kind of picking up. If anything, the Bank of England are going to hike rates again in a couple of weeks' time. I'm going to put it out there. 145.54 is going to get tested. So definitely another 250 pip move here in the foreseeable future. So the coming weeks, I think, is going to happen. So definitely remain biased on that positioning play. All right, quick look at some of the other headlines. We'll try and wrap in a few charts. So this is kind of where we're at the moment, the current state of play. Trump and allies weigh the risk of Syrian strike. As I said previously, so Trump, Macron consider possible strikes, Theresa May kind of getting the sign-off, so to speak. What's the opposition's commentary? Well, I don't think it's any surprise. Jeremy Corbyn and Labour saying that this really should be heard in the UN Council and Parliament to have a say in whether or not this action should be taken. We should have learnt the lessons from the Iraq War and so on and so forth. So one of the key things here, and one of the reasons why I think we have had equities move higher yesterday, don't forget we finished up on Wall Street basically 1% across the major 3 US indices. We've had gold pull lower. You've had T-notes also move back lower, as you can see here in the bottom right. It's because I think the immediacy of any type of military strike has kind of fallen away. And do I think that Syrian strike is going to happen? I don't know. I just think that everything that Trump has done, this has just fitted the same routine. Whether it's the trade war, whether it's NAFTA, and now this morning having seen Trump talking about the Trans-Pacific Partnership, TPP, where he left originally, and now he's talking about we might come back if we can get good terms. So he, as we know, he starts at a very aggressive point in the negotiation process, puts it out there on the front foot, and then comes materially down quite quickly. And certainly that helps de-escalate the situation from his initial commentary. The interesting comment I saw this morning, Russia commented about half an hour ago and said this. Russia says international relations should not depend on one person's mood in the morning. There you go. That's the current state of diplomacy that's going on at the moment. But all seriousness, to give you an idea, like I've mentioned a few times this week, my kind of average calculation of the data of tweets from Trump shows quite a familiar pattern, that the highest proportion of his tweets on a daily basis are front-loaded to when he gets up. I'll let you read between the lines of what you think about that in terms of the timing. But the main point is that he tends to tweet at around 11:45 to 12 o'clock London time. Now, the one thing is, when he made that very inflammatory comment about Russia midweek, that did come a little bit earlier. I believe that came at about 11:15. So I would say basically from 11 a.m. I would be mindful, if you are the type of trader that likes a fast-moving market, your risk appetite is quite high, you're an activist type trader, then just be aware from about 11 a.m. Even though this situation appears to have de-escalated, as I said, I definitely would be aware and vigilant at this point for any changing of this at the moment. Interestingly, and on the sidelines, China are today conducting their largest ever live military exercise drills. So yeah, it's interesting this week actually, because Syria has come up and Syria's tied to Russia, so it's really been a Russian focus with the US. But you know, if you think about 10 days ago, it was all trade wars, trade wars, trade wars. You know, who's talking trade wars now? And the interesting thing though is here, and again, this is all part of the same equation, is that how do you best negotiate a, let's call it a trade business deal? Well, what you do is you conduct the biggest ever live round ammunition military drill in the East China Sea you've ever done. No better way to negotiate than to just flex your guns, literally, to kind of show a hand of force, not to be reckoned with. So this is also happening in the background, and quite unsettling so, especially for Philippe, given his Taiwanese heritage. But this is all happening in the Taiwanese Straits, I'm afraid. So something to just be aware of. I don't think this is going to move the market, but certainly there's a lot going on in geopolitics at the moment. What's this doing? Obviously, oil has had a really big week. Oil's best rally since July on tensions, according to Goldman Sachs. They've been long oil for a while. They're kind of tooting their horn this morning, saying we're still long, we were right. But as you can see here, it was one of the biggest gains we've seen in a long time actually in crude oil. And if we actually start looking at the oil chart this morning, where are we? We're pretty flat. We found a bit of support overnight on the pivot level, but you can see really powerful move that we've had from the 62 handle all the way up to 67.5, pretty much, when we got to yesterday's afternoon's session. So we've held on to it. I do think that even if we did get a bit of a pullback, I definitely want to be looking at points to still remain of a long positioning. So where could that entry point come? Well, I guess we'd be looking on any meaningful pullback really down to the lower levels, maybe this kind of band here if we came down, and maybe even following it further down if that was to materialize. But I would say that for the current price action on the intraday, this kind of area is going to hold for now at least, and I'd be mindful of any tests of the weekly high, because it wouldn't take a lot. If you start looking at this on a daily continuation, this has also been a big week for oil, because if you look, here we are, highest prices since 2014, and we have got our head above that double top, which really held the price for the best part of 2018. So for me, calls of $70 I don't think are unreasonable. Calls of $70 today I think is a low probability, but $70 in the next week or so, yeah, sure, I think that's possible. Because if you look at it technically, well, you've got plenty of reason to think we could go even higher than that. The previous consolidation of some price action doesn't really come in till we get to more around the $74, $75 handle. So 70 I think is definitely could be seen. And if the Saudis have anything to do with it, remember what they said at the beginning of the week? We want oil at 80 bucks. And if Saudi says that, they're one of the biggest producers in the world, of course. Let's see. Given the heightened geopolitics, there's no reason, I don't think, why this the price should not still be supported going forward. A few other things to be aware of. It is actually earnings season. You might have forgot with all the other news going on, but US earnings season is underway, and today we get the first of the big US banks. So it's the traditional kind of format. You get JP Morgan, Wells and Citi coming out pre-market today in a few hours time. This then gets followed by the other banks next week, and then we get the rest of the S&P, if you like, coming thereafter. Looking at it, for these banks, a quick look at this FT article just to summarize things for you. Not going to go into it into greater detail, but if you would like it, I can post it. Trading divisions buoyed by the right kind of volatility. If you think about it, Q4 of 2017 was a bit of a nightmare for these banks because of the lack of, or the lowest type of volatility that we had seen since the early 90s when measured by things like the VIX. Whereas now, 2018 has started like a firework or a firecracker. It's been great if you're a volatility trader in that sense. The VIX, which is the measure of implied volatility in the SPOOs, the S&P, is consistently traded above its long-term average of 19, a level it did not reach at all in 2017. So it's averaging a level it never even touched last year, to put it in some context. Corporate loan growth needs to be watched. Other areas, the slump in mortgage lending and credit quality, as well as regulatory reforms as well, are areas of which the FT is suggesting we should be looking out for. This week saw two key developments. A softening of the annual stress test in certain areas was one of those, which of course we know is for Trump part of his other plans to stimulate the economy and the banking sector by deregulating the market. So those banks will be coming out pre-market, be mindful of that. Looking at the schedule for today, it's pretty quiet this morning. The only real thing maybe keeping half an eye on is the IEA oil market report. But one thing I would say is that much like the inventory data we had from the DOE on Wednesday, the market really isn't too fussed about the supply and demand situation. If you look at oil, it's rallied from 62 to 67 over the course of pretty much a week on this Syrian situation that's been developing. That's irrespective of the fact that US output continues to surge. So US output we saw was up 0.62%. I think it was 10.525 million earlier this week. You know, these are incredibly high levels, which should mean more supply. The only thing is, at the moment, the market's not focused on that. I'm sure if this geopolitical situation does come off the boil in the coming weeks, people might start to look back at this, but at the moment, that's a definite secondary factor here. Otherwise, it's going to be, again, a US-dominated session. As I've been saying all week, the market is moving from the US participants, and it's because of the narrative of Trump, of Syria, of the movement that's been happening in recent weeks in the US equity market. It's all about North America at the moment. So I'd definitely, again, be looking to allocate your energies towards the latter part of the day. There's not too much in the way of economic data. You do have University of Michigan, this is the preliminary reading, but again, these numbers are at relatively high historical areas comparative to the data over the last decade. So I think Michigan, really forget about it. I mean, I'd monitor it, but is that going to shape and define the price movement across asset for today? No. What I want to know is, going into the weekend, what's the latest state of play on this Syrian front, and is or isn't Trump going to do anything, and is it going to happen potentially this weekend? Everyone else seems on board from all the other major powers, but really, as is always the case with military intervention on a global scale, it's down to the Americans. In terms of speakers, couple to be aware of, most, or probably the one that to be aware of the most, is Fed's Bullard, which is at 2 o'clock, but is talking about living standards across metropolitan areas. So I would say this topic in itself maybe not interesting, but Bullard is probably one of the most outspoken Federal Reserve members there is. So I would keep an eye on that. That's at 2 o'clock. The earnings, typically from those banks, will probably start coming. The earliest one about 12:30. The next one's at 1 PM London. All right, going to leave it at that. It's 9 o'clock. So going to wish you all a great day ahead and have a fantastic weekend. Thank you.